Hey, Nick with Atlas Premier Realty.
Greg Brock with Atlas Premier Realty.
Matt Nader with Bay Capital Mortgage.
Thanks for taking a minute to watch another one of our video blogs. Today our topic, we wanted to discuss the recent rise in the federal fund interest rate, and then also talk about the treasury bond yield rising and how that impacts the consumer. So we have Matt here to talk about that.
Thanks, Nick. I appreciate it. So what's recently happening now is the economy is starting to improve, which is obviously great for all of us. The Feds just increased the overnight discount rate by another 0.25%. The overnight discount rate doesn't directly affect long-term rates or mortgage rates. It's more auto loans, credit cards, and home equity line of credits. But the reason behind the increase is due to the economy improving. So long term, our mortgage rates are on the rise. We've gone up about 0.75 of a point in the last 4 months due to the fact that monies are starting to flow out of the bond markets into the equity markets.
So what that probably means is that in the short term, we're going to see a jump in activity from our buyers. The buyers are probably going to be a little bit nervous that interest rates are going to jump up, and they don't want to have a really high interest rate, so they're going to try to get into the market as soon as possible to avoid that.
Kind of that fear of missing out on an opportunity.
Correct. Yeah. If the interest rates jump even more, they're afraid that they're going to end up in the high 4s, high 5s, something like that. So they want to get out in the market. Currently, we have low inventory, so we're seeing a pretty competitive market. I'd like to see a lot of more inventory on the market, and that will hopefully relieve some of the buyer stress and multiple offer situations that we're currently seeing. That in the long term, I would expect that we will actually see this interest rate probably pull back on the amount of buyers that are in the market, and it's actually going to weed out some of the less serious buyers and make sure that the buyers that are in the market really are out there to buy and to seriously buy.
Yeah, and I think it's just important to realize that while it does seem like interest rates are going to be starting to trend upwards in the long term, if you're interested in buying or selling, it's just important to realize it's an opportunistic market, and just consult with a professional, consult with a mortgage professional, consult with a real estate professional to see where you're positioned best in the market. And that's just a more strategic way to go about this. So don't worry too much about the conditions that you don't have control over. Just touch base with a professional like one of us, and we'll help you find out where you're positioned in the market. So
I was going to say, with the interest rates increasing, what that can do to you, you still can qualify for a home purchase, but maybe your buying power would lessen. So if you were a qualified buyer up to $300,000 at a 3.5% rate 4 months ago, and now let's say we're 4.5 or 5% in 2 months or 3 months, maybe your buying power drops by $25,000 or so. So you're still able to afford and still able to start looking, but maybe your buying power it's less at this point because of the increase in the rates.
That makes sense. Yeah.
So just wanted to touch base on what's happening recently with interest rates and the federal fund rate and the bond market, and let you know how that transfers over to the consumer market. So we appreciate you tuning in. As always, if you'd like to see a topic covered in future videos, please let us know. Have a great day, and thanks for tuning in.
Thanks a lot.